So yes, hello, and it is BG Dollars back with a Fed video. Of course, I'm going to be discussing in this one, is 75 basis points rate hike on the table tomorrow? What is going to happen to the markets? As you can see on the screen, S&P 500 is down 0.85% today. Day before the Fed comes out tomorrow with their interest rate statement. FOMC decision. Are they going to change their bond selling? Who knows? But let's just have a look at the markets first of all before we get into the Fed juicy news later on. So please do stick around. But right now, as I said, S&P 500 down 0.85%. You've got the Nas down 0.75%. Apple's just up at 0.6%. DocQ's down 1.27%. Not too bad on that one. Google up about 0.5%. And Microsoft up about 0.5% as well. You've got Autodesk down. We're just going to quickly scan through these because obviously this is a Fed video. I'm not trying to clickbait you lot. But Nvidia up 1.2. So some stocks are up, some stocks are down. What was that? XPeng up 8.3%. That's a good move for XPeng there. Disney slightly down. But yeah, as you can see, look, some stocks are up, some stocks are down. Tesla up 2.7%. Good little move on Tesla there, but it could nothing. It's all just hit and miss because tomorrow's the big news, and that's gonna move the market. Tomorrow's news. So today ain't really fussed about. Yeah, Corsair down. These are the risky whiskey plays. Fastly down 2%. Got the meme stops up at least 6% for GameStop. AMC up there 2.5%. Roku and Teladoc up. ARK up 1.5%. So if ARK's up, then I just conclude it's a risk on day if ARK's up. All right. Anyway, let's move on to the Fed. Fed likely to boost interest rates by 0.75 points this week. Of course, we know it's tomorrow, isn't it? So let's bun off this week and say tomorrow. 0.75 point tomorrow. Key points from CNBC. They always come out with these key points, the bullet points here, that I like to read and just go through with you. Fed policymakers are entertaining the idea of a 75 basis point rate increase this week. What does entertaining mean? Entertaining the idea. Like, look, no one knows. That's why they word it like this. No one actually knows what's going to happen. It's a possibility. 75% is a 75 basis point rate increase is a possibility. That's all they need to put. Bond yields pointing to the possibility of a more aggressive Fed as the yield on 10-year Treasury shot up. While the 2-year yield, which most consistently tracks Fed intentions, accelerated to 3. That's way too high for the 2-year yield, 3.34%. Now, you can clearly see that there's something systematically wrong there when the 2-year yield is up that high. Of course, the yields have inverted, haven't they? Yield inversions there. Well, not good because they predicted every single time that the yield has the 10 and 2 has ended up in a recession not too long later. So, of course, that's something that we need to take note of. Markets begin to anticipate an even faster pace of interest rate hikes, and Federal Reserve officials apparently contemplating the possibility as well. Central bank policymakers are entertaining the idea of a 75 basis point increase to the Fed's benchmark funds rate that banks charge each other overnight financing. Changes in the economic outlook, likelihood that inflation hasn't peaked. Well, of course, we know inflation hasn't peaked because we saw the May report, didn't we? We saw May inflation, obviously 8.6%. If you haven't watched that, go watch that report. It came out on Friday. You should have a little info up there that I'll give to you, so it makes it a bit easier for you lot. An earlier Wall Street Journal Monday afternoon first reported the change in central bank stance. The Fed funds rate feeds through to many consumer products that are based on adjustable rates such as mortgages and credit cards. Just actually a quick note on the inflation. Of course, you all know 8.6%. It came out. This is why I think the Fed is going to do 75. I actually personally believe 75 basis point is coming tomorrow. And I'm going to explain to you why just now. Because the Fed's 50 basis point sort of plan, of course, we were expecting 50 basis points tomorrow and 50 basis point in July. That was based on inflation peaking in March. It came slightly down in April. We were going to get a May report, again, slightly down or a similar result. The fact that inflation has gone up more and peaked once again suggests to me that the Fed have got to change their plans. The plans was based on inflation coming down. It had already peaked. Now inflation has made a new peak. They weren't expecting May to be higher. It was, which is why I think they're going to change their stance on it, and the 75 basis point move is coming. Of course, who am I? No one really knows what's going to happen. I wouldn't be surprised if it's a 50 basis point rate hike. No one really knows. No one can say for sure it's going to be this, it's going to be that. If a 50 basis point rate hike comes, oh well, so be it. You know, I think an actual more hawkish Fed is better for the markets. And I'll explain to you that in a little bit later on when we move on to analysing the S&P, which is coming up later. But first of all, let's just go through this CNBC news here. Goldman Sachs said it's all trading its own expectation of 50 basis point move to 75. Citing the journals reporting, and who's this? Citing the journals reporting and noting that the newspaper the day previous reported that the bigger move was unlikely. That's what I mean. Goldman Sachs, they said the bigger move was unlikely. bomb. Last Friday report came out. So-called leaks that have come out on this Wall Street Journal from the Fed saying they're going to do a 75 basis point move. I mean, I don't know about the leaks. But they're saying that apparently it has come out before the leaks, and this has been true. So you can never really tell. But I personally believe a 75 basis point rate hike is coming anyway. I don't really know much about the leaks or anything like that. I just presume it will come. But followed by a 50 basis point move in September and 25 basis point move in November, December, taking the Fed fund rate to range 3.25. So yeah, look, consecutive 75 basis point rate hikes in June and July. Wall Street firm economists now foresee. Oh, that would be very, very rough. But as I said, a more hawkish Fed is better for the market. So that would be good, in my opinion, for the market. And as I said, I'll move on to that later on. This most likely triggers for a shift to a more aggressive pace of tightening. The upside surprise in May. See, surprise in May CPI report. No one was expecting inflation to come out higher. It did. That's why the Fed has to change their plans. Their plans were based on inflation peaking in March, and that didn't happen. Krishna Guha, who is that? Head of Global Policy and Central Bank Strategy at Evercore. Note the unusual nature of the media speculation so close to a meeting when policymakers are prohibited from making public statements. It looks like we were wrong on 75 is after all likely this week. So more and more people just coming out and saying 75 basis points is more and more likely. Of course, this is pretty much the end of the... 10-year Treasury shot up 3.37 Monday. 2-year yield accelerated 3.34%. That is just way too high. This is why I think the Fed should start selling their bonds. They need to start selling their bonds, increasing the selling of bonds. Look, I'll be happy if the Fed came out and do a 50 basis point hike and double the amount of selling their bonds. If they do a 75 basis point rate hike and they double the amount of bonds they're selling from 100 billion to 200 billion, I think it's 100 billion at the minute. Hey, I'm a happy man. I'm a happy man reading that report. As I said, I'll get on to why I think if the Fed's more hawkish, it's better. But the Fed uses interest rate increases as a way to damp. We know all this. I mean, come on now. Markets expect the central bank to continue jacking up rates for at least the end of the year as it tries to pull inflation down. To think that it's 2% target, and where is it at now? 8.6%. It's atrocious, isn't it? They're sort of messing up somewhere there. But of course, most of it is due to supply chain snags and, of course, oil and all this, that, and the other that isn't necessarily down to America. But Friday's consumer report, of course, we know that. University of Michigan's widely followed consumer sentiment gauge fell to an all-time low. Now, interestingly, if you haven't checked out my Twitter, BG Dollars, please go follow me on that one. I put up a little post that had a little picture of University of Michigan's consumer sentiment and asset prices. Now, they correlate together. And normally you do get the consumer sentiment move first. So there's like a few months lag between consumer sentiment and asset prices. And of course, consumer sentiment fell to an all-time low. That is not looking good for asset prices, is it? When I talk about asset prices, you're thinking not just stocks. You're thinking housing prices. You're thinking all this, that, and the other. Sorry, I could only name stocks and houses. I mean, they're the two main assets that come to my head. The roots of inflation are multi-prolonged, clogged supply chains pushing up price. We know all this. Situation aggravated. We know the Russia attack on Ukraine. Supply-demand mismatch. And of course, the labour market. We want to make sure that the labour market starts cooling down. You know, we got job openings up earlier on in the month, and it was again very hot job openings, and it's just not good. We need job openings to come down. We need unemployment rates probably to go up, to be honest with you. So yeah, that about does this report up. But of course, I do want to take you on to... Now, this chart here is US JOLTS job openings. And as you can see, look, boom, we are very, very high up. Early 2022, look at that, look, we're all the way up by high 11s, 11.8 mil we got. That seems to be its peak in May. And of course, June, it was slightly back down. But yeah, let's just see its max. And what I'm going to do is I'm going to go back to the last big sort of recession, which was in 2008. And you can probably already see, look, where we stand. Look at this. Peak, again, 2007. What, a year later, boom, 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 boom. Recession hits. Job openings came down to, well, multi-year lows. I mean, you hadn't seen this before. Look, it's not even on the chart how low it got to. And poor little 1st of August 2009. Atrocious. But yeah, as you can see, look, job openings peaked in 2007, came all the way down, recession followed. Job openings are here right now. a year later, boom, if we're following the same pattern, recession follows. Of course, we had the yield inversions, always predicts a recession. Recession is always followed after a yield inversion. We've had the yield inversion. So I think, I mean, look, I don't want to say no if, buts, and maybes, but recession is very likely. I mean, come on, people, let's not sort of dibble dabble on the news about this soft landing rubbish. It's not going to happen. I think the Fed know it's not going to happen at this stage as well. Of course, interest rates, bomb, already up to 0.77, where they're already at like 1%, aren't they? Right, so now I want to explain why I think a hawkish Fed tomorrow is better for the markets. Now, of course, as you can see, this is a chart of the S&P where we are. This line is sort of just like a trend line. Of course, we dipped below that here, which is not good. Now, I don't really dabble in technical analysis. I do sometimes. But yeah, we've gone below it, so this line may as well just be cleared off. I may as well just get rid of it. Okay, so a hawkish Fed. We have to bring down inflation, all right? Listen to me now, yeah? Look at the camera. Look at my eyeballs when I'm speaking to you saying this. We have to bring down inflation. If inflation don't come down, the markets aren't going up. It's that simple. How are we going to bring down inflation? A hawkish Fed. We need to raise interest rates by 75 basis points tomorrow. If it goes up by 50 basis points, I think the market will tank more. Why? Because the market is losing hope in Jerome Powell. He's losing credibility. The thing is, right, inflation is at 8.6%. The markets don't think Jerome Powell can get that down. Jerome Powell needs to be serious. He needs to be upfront. He needs to say, look, I'm serious about inflation. We're getting this down. Boom. 75 basis point rate hike tomorrow. If that comes in, I don't think the market is going to crash as much as if a 50 basis point comes in. I firmly believe that. Much contrary to most people's opinion, but I believe that. I think we need to get inflation under control, and when that starts pivoting downwards, why do you think there's a fat green bar here for May? Because obviously April's inflation report was lower than March's, wasn't it? We thought inflation had peaked in March. So when we saw that inflation down, boom, we had a fat green bar. Now look, as soon as May's report came out, higher, 8.6%, new peak, boom, we sold off. We have to get inflation under control. When that starts pivoting downwards for consecutive months, which I predict after summer, I think we need some more rate hikes. We need more selling of bonds from the Fed as well. 100 billion is simply not enough every month. That's when we're going to see the market start recovering in my eyes. So, a quick little summary for you. I expect a 75 basis point rate hike tomorrow. I expect a hawkish Fed is better for the markets. However, I wouldn't be surprised if a 50 basis point rate hike comes tomorrow and the old 75 basis point is on the table, which I hate the wording in the way they use it because they don't actually tell you whether it's coming yes or no. They just say on the table and we're just left guessing. But that is how it is. Big day tomorrow. I'm going to obviously be doing a market day. I'm going to be posting another video. If you've been watching recently, thank you everyone so much for the recent sort of boost up, if you like, in views, because I've just done immensely well in the past few days, and of course I've got all you lot to thank for that. So thank you very much. Please do subscribe. As I said, follow BG Dollars on Twitter. I will be back. I'm probably going to be releasing a Bitcoin crash video because, of course, that has just been atrocious, hasn't it, in the past few days. If any of you are in crypto, I'm sorry to put straight forward to you. But yes, this is BG Dollars over and out. I'll see you in the next one, people. See you.